Hi guys, episode 5 here, and what we're going to talk about today are easy things that you can do that will help you save hundreds of dollars every month, and then hopefully you'll take those savings and you will invest those in appreciating assets that will allow it to compound over time and help build your wealth over time. Again, keep in mind, if you fail to plan, you are planning to fail. Let's plan to win. So what are we going to do? We're going to plan and then analyze our plan to ensure that we can find ways to cut our costs to allow us to save hundreds of dollars each month. So then we're going to take those savings and we're going to invest those in appreciating assets. So in the later part of this video, I'm going to walk through an example where you lay out all your income, you lay out all your expenses, and then you challenge each one of those expenses. And you've got to make sure that your expenses are less than your income. You know, all companies do this continuously. Every year they do a budget, and then once the year starts, they'll compare their budget versus their actuals. And then if their expenses are running too high, they will challenge them and they'll try to cut those. Or they'll try to find ways to increase their revenue. Either way, over time, you got to make sure your expenses are less than your revenue. If you don't, you're going to go out of business. So they take this process very serious, and families should do the same. The world of our parents and grandparents is different. They lived in a different era than we do. You know, companies used to pay for pensions and provide for pensions for their employees. Well, that doesn't happen anymore. If you're in a union, it could happen. It probably happens. If you're in a government job, it probably happens. But most private companies, they don't do that. They'll pay you and they expect you to take part of your income and invest it over time. So, you know, if you don't do it, who's going to do it? And if you don't start now, when are you going to start? Because the best way to build wealth is to start young and allow that wealth to grow over time and compound. That's the best way to do it. So one of the first things you really need to do is just kind of outline a budget or a plan. And again, you're going to need to kind of list your income at the top and kind of keep in mind that, you know, you've got some taxes, whatever your tax rate is, put that in here so that you can determine kind of what your take home is. Then what we're really going to focus on are the expenses. If you have a home, you've got mortgage, interest, principal, real estate taxes. If you're a renter, you've got rent expense. You've got homeowners insurance or rent insurance, water, sewer, trash, gas, electric, car insurance. You know, if you've got a couple cars, you might have a couple car payments, gas, healthcare, food, entertainment, clothing. Go through and kind of list out all your expected expenses. So that's number one. Then what you're going to really have to do is start analyzing and challenging each one of these expenses. And again, it's important. We do this in business all the time because your business income can go up or down in a year. So you got to make sure that your expenses don't exceed that income. So for your mortgage, you probably have a lower interest rate now than what's available in the market because in the last year the interest rates have gone up so much. But if you don't, shop that. Consider a roommate, especially if you rent. You know, you've got to find ways that you can share in your costs or cut your costs. If your rent is too high, consider moving to a lower rent area. Homeowners insurance, absolutely shop that. I'll tell you this, at one point we had 27 rental properties and we had not shopped for about 5 years. I was just too busy with work, didn't do it. So I finally did it. And once we got the quotes all back, it was over $2,000 savings a year. which was easy. All we had to do is switch our insurance companies, and that was automated. So, there's gas plans out there. Sometimes the city that you live in have different plans. You should definitely shop, for better gas rates. Car insurance, same kind of thing. If you haven't shopped your car insurance for a while, you absolutely should do that. There's generally insurance companies want to incent you to move over. So especially in that first year or 2 years, you'll get a better rate than probably you've got now. I kind of went out there for homeowners insurance. Progressive, Geico, State Farm, USAA are pretty competitive apparently. And kind of the same thing for car insurance. Geico, Auto Owners Insurance Company, State Farm, Allstate. Get 3-4 different quotes, and if need be, switch. So also, if you have a couple car payments, like in this example, I'm showing, your car payments are almost $950 a month for the two folks. Well, that's horrible actually, because cars are depreciating assets. I think most people know that. If you don't, they absolutely are. They don't go up in value generally, they go down. So you want to spend as little as you have to for depreciating assets, and it's okay to invest in appreciating assets, like hopefully your home or a rental property or stocks. Those types of things generally go up in over time, and they appreciate. Cars generally go down. So if you have a new car and you have big payments, really consider trying to trade that in and get a good used car. You've got to figure out ways and get serious about cutting your expenses. Food, again, shop around, consider eating in more than you have. If you're going out 2 times a month, or a week, not a month, then consider eating in and only going out 1 time a week. There's certain expenses that you control, and you've got to control them, especially when you're young and you're trying to build your wealth. You've got to do that. Once you get a little older and you have some wealth, the game changes a little bit. But when you're trying to build, you really need to kind of control those costs. When you're out, consider drinking water instead of a cola or something like that. I know the last time I went out, I didn't even look at the bill. I got an iced tea, and it was $3.50 for an iced tea, which is basically water. So there are certain things that you can do to kind of control your costs. This item right here, TV, internet, phone, I think most people know this, but 20 years ago, 30 years when I was growing up, that stuff was free. Well, we didn't have the internet, but the TV was free. The phone you had to pay for, but you generally had one phone. Now everyone in the family has a separate phone and a separate phone plan. You've got to pay for the internet. You've got the cable bill. You really got to focus in on this guy right here. That one has to be controlled. And there are free types of movie type channels or movie network type things. This thing called Pluto TV is free VTV. Now they have some ads, but the ads aren't that bad. I've been experimenting just to kind of see, and normally a minute, 2 minutes, that kind of thing for ads while you're trying to watch a movie. Not YouTube TV, that costs about $70, $75 a month, but YouTube has a lot of free movies, etc. This Philo TV, I think, was $25 a month. So start getting involved and trying to figure out ways to cut this expense. Credit cards, you've got to get those down to where you're not carrying a balance at the end of every month, because if you are, you're paying at least 15 to 20%. That's egregious. You have to get rid of that balance. If you use a credit card, you really need to get to the point where you're paying it off at the end of every month, or else you can't afford this credit card. You should be paying cash for things. Student loan, again, you've got to try to pay that stuff down. once you got your education, this thing doesn't do anything for you. So at all costs, try to get your expenses under control, get them down. Once you do that, then you can take the excess funds and invest them into appreciating assets, whether they're stocks or rental properties, which we're going to talk about in the future. But you've got to get to a point where you are making more than you're spending. That's a must, or you can't build wealth, obviously. So again, consider paying those credit cards down. Consider doing something with your cars. If you're spending $1,000 a month on car payments, you've got to take a good look at that and say, is there a way that I can get a good used car as opposed to whatever type of car that you're buying or renting? And you've got to try to focus on paying your student debt down. So those are the easy things that you can do to try to control some of your costs, to kick off an extra couple $100 a month. And if you take that extra couple $100 a month and invest it over a long period of time in a good index fund, you're gonna be amazed at the difference that it's gonna make in your long-term wealth. Remember, we're building our banks, not our biceps.